Let's be completely honest. How many times have you found the perfect technical setup, verified it with your favorite indicators, entered the trade with absolute confidence, and still ended up blowing your account? You blame the strategy, you look for a new indicator, you jump to a different guru's method. But here is the harsh truth that nobody wants to tell you. The market didn't defeat you, your own mind did. Welcome back to Prohit Club. Today we are pulling back the curtain on the single most critical factor in trading success. Something that matters more than price action, smart money concepts, or any complex algorithm. We are talking about trading psychology. By the end of this video, you won't just understand why you make impulsive mistakes. You will have a bulletproof 4-step psychological blueprint used by institutional pros to stay calm, disciplined, and consistently profitable. If you are ready to stop giving your hard-earned money back to the market, smash the subscribe button and let's dive in. In the trading world, you aren't fighting institutions. You are fighting two ancient psychological survival mechanisms wired into the human brain: greed and fear. Let's break down exactly how they secretly sabotage your trades. First, let's talk about villain number 1, greed. This is the ultimate account killer. Greed tells you a beautiful lie. You can get rich by Friday. When you hit a winning streak, greed takes the wheel. You start over leveraging, taking position sizes that are way too big for your account. You see price pumping and you get hit by FOMO, the fear of missing out, chasing a trade that has already moved 5% or 10% without you. Worse, when a trade hits your profit target, greed whispers, "Don't sell yet, it's going higher." You stay too long, the market reverses, and your beautiful winning trade turns into a painful loss. Then we have villain number 2, fear. Fear does the exact opposite, but it's just as deadly, and it usually shows up in two distinct ways. The first way is the fear of loss. You see a perfectly valid setup that meets 100% of your rules. But because you lost your last trade, your heart races, your hand freezes over the mouse, and you hesitate. You miss the entire move. The second way is loss aversion, and this is the most dangerous one. When a trade goes against you and hits your planned stop loss, fear refuses to let you accept being wrong. You move your stop loss lower. You give it breathing room. You pray for a bounce. You turn a small, controlled 1% loss into a devastating 20 or 30% portfolio wipeout. Neurological studies show that the human brain processes a financial loss in the exact same area it processes physical pain. Your brain is literally trying to protect you from pain, which is why it makes you do completely irrational things at your trading terminal. Because of this, most retail traders get stuck in a toxic, invisible loop called the self-sabotage cycle. It has 4 distinct stages, and see if this sounds familiar to you. Stage 1 is high confidence phase. You have a couple of winning trades. You feel like a market wizard. You believe you have finally figured out the matrix. This leads directly to stage 2, the rule break, because you feel invincible. You break your risk management rules. You double your lot size or trade an erratic high impact news event. Then comes stage 3, the shocking loss. The market humbles you instantly. You hit a massive loss that wipes out all your weekly or monthly gains. Shock, denial, and anger set in. Finally, you land in stage 4, the revenge trading. You immediately open a new trade out of pure anger to make your money back. You aren't reading charts anymore. You are gambling. you are trying to fight the market. This is the exact moment where trading accounts go to die and the cycles resets all over again. So, how do professional institutional traders break this cycle? They don't have a magical 100% accurate strategy. What they have is a shift in perspective. They think in probabilities. Think about a casino. The house has built-in mathematical edge of just 2 to 5% on a roulette wheel. Does the casino owner panic and shut down the building if a player walks in and wins $50,000 on a lucky streak? No. Why? Because the owner knows that over 1,000 spins, the mathematical edge guarantees the casino will make millions. As a trader, you must become the casino, not the gambler. If your trading strategy has a 55% win rate with a 1 to 2 risk to reward ratio, you possess a powerful edge. But here is a catch. You have absolutely no idea which individual trade will win or lose. You could easily have 5 losing trades in a row. A professional accepts a loss as a standard business invoice. It's just a cost of doing business, like paying rent or electricity for a physical shop. A beginner views a loss as an insult to their intelligence. To help you fix this, here is your actionable 4-step blueprint to build a rock-solid trading mindset starting tomorrow. Step 1. Position sizing is emotional sizing. Never risk more than 1 to 2% of your capital on a single trade. If you can't sleep peacefully at night while a trade is open, your position size is too big. Lower the size until the screen ticks don't make your heart race. Step 2. Use hard stop losses. Put your stop loss into the system before you click buy or sell. Once it is set, do not touch it. Let the market either hit your target or take you out. Never make mid-trade adjustment based on a sudden gut feeling. Step 3. The 3 strikes rule. If you experience 3 consecutive losses in a single day, turn off your computer. Step away from the screens, go for a walk, and reset your dopamine levels. The market will be there tomorrow. Step 4. Practice equity neutrality. Stop looking at your running profit and loss in amounts while the trade is active. Switch your broker view to points or percentages. Looking at real money flashing green and red triggers greed and fear instantly. Remember guys, you can buy the best software, draw the cleanest trend lines, and read every finance book on the earth. But if you cannot control your inner emotions, the market will continuously take your money. Trading mastery isn't about predicting the future. It's about controlling your execution in the present. Which emotion trips you up the most? Is it FOMO or revenge trading? Let me know down in the comments below. If you found value in this breakdown, hit that like button, share this video with a fellow trader, and don't forget to subscribe to Prohit Club for more deep dive wealth blueprints. Trade smart, stay disciplined, and I will see you in the next video. Thank you.